Hello everyone, I hope you are doing well since then. So in the community I said I won't do any videos before sometimes, but as I have many examples now through this last week of the use of inverted fair value gap, concept from ICT, I want to show you how I use it. And promise this is the last video of this year on trading, and probably next year, if I keep consistent, I will try to do live trades, or maybe I will do like I did last year, with the live tape readings and etc. Okay, so all in all, as you can see, I'm always using the same concepts: the BOS inducement, the intermediate term low, etc. And I just introduce this concept of inverted fair value gap, as you can see. And I want to show you an example which I did not take live. It was Tuesday. So Tuesday, you see, there was this inverted fair value gap, which for me was important because it was the one who kind of, even if probably this one created displacement too, but for me, this one, as you can see, maybe this one was even better, as you can see, because this one, perfect touch, created the displacement and took all those weeks. When a fair value gap takes many weeks, this one is better than the one above. It's a strong one, okay? And so here, as you can see, there was no real fair value gap, something clean, On the 1 hour, you had a fair value gap and an order block, etc. But still, for me, this fair value gap is not really significant, even though it led to a break of structure. I prefer, for more precision, this one is clean. For me, when my eyes see this fair value gap inverted, of course, because it is on the sell part, normally we trade fair value gaps, which goes into our direction, right? And so what's good is inverted fair value gaps, they work very well with other areas. For example, you have this inverted fair value gap on the 15-minute, and as we saw on the 1 hour, you have also a fair value gap, okay? This one or an order block, doesn't matter, okay? And so they work well together. And if you zoom in the 5-minute, okay, you have another, okay, so this is liquidity. And you have another fair value gap right there, okay? So you can see the wicks all inside. But I always go with the most clean, the cleanest possible area. And for me, it was this inverted fair value gap. So on the 1 minute, how you can trade this? As always, I wait for shift in market structure. This was not clean for me. However, this is clean. And this fair value gap is a displacement fair value gap. Up, very easy entry, very clean and very easy. Forget about this. This is not a good entry, okay? Not all fair value gaps are good entries. And so, of course, the stop is below. It's only a 6.8 with the spread stop. And you could aim, I believe in higher time frames, there was something on the left. Anyway, you just aim for the regular 20 pips, counting the spread. Okay, TP, pretty easy. So now today, same thing, on the daily. On the daily, so now I'm in a live trade, okay. And so on the daily, we took some buy-side liquidity, right? But when people see this strong candle, the first thing they do is they try to sell, okay? So personally, even though I would like to sell, I won't sell right after this candle, okay? Probably there is another area here, or maybe, I don't know if it's right, but it can go higher into another inverted fair value gap. So this inverted fair value gap, I believe it's in the weekly, okay? Why it is important? Because it took many weeks, okay? And once we closed below, we didn't come retest this area. So maybe we will go into this area. Maybe. I will try to see the reactions, okay? Now, we have this big, okay, this big candle, big fair value gap. I don't like big fair value gaps on higher time frame. On the 1 minute, it would have been okay, you know, to trade from there. But now on the daily, we won't trade from there directly. But we have an inverted fair value gap, which come to support the idea of trading from this big fair value gap, okay? And so this area is smaller, okay? So here it was not a displacement fair value gap. This was the displacement one, but this has been retested already, okay? It can still be a good area to trade from. It has not always to be a displacement, okay? It's better, but not always. So now, let's go into my trade setup. So as you can see, this was yesterday low. It has been taken during Asia. And in my mind, I was like, okay, if we take this and we do a shift in market structure, then I will buy a continuation, okay? Because here, all along, there are sellers above liquidity, above this high, okay? So you could target at least there. I took portions already, okay? Stop losses. So as I said, I still trade the same. I didn't change, okay? I found my edge. I don't have to look for another new thing or new strategy. Always keep with your edge. You can add little things like the inverted fair value gap, etc., to perfect your edge, but you don't change everything, you know? I kept the same formula for trading. And so you will see this setup. If you have followed my channel and my live tradings, my live tape readings and all the reviews, etc., you know I have some setups, okay, which occurs every day, every week, every month. And so the today's setup is the New York manipulation before 8. As you can see, New York Open is there. Here is liquidity. We manipulate this liquidity and then we form a new range. Of course, here is some liquidity inducement trap. And this was a displacement for value gap. Now, before, when I saw this, when I woke up, I directly put intermediate term low on this because on the 5 minute, look, it looks pretty clean. This was short term. This is intermediate term. It formed a fair value gap and then some shitty price action to induce people which want to sell inside this order block, which broke the structure. Okay, they want to induce people to sell, create more liquidity. Okay, therefore, here is like a little BOS. BOS, bot. Okay. Hop. So there is first inducement, the 5 minute order block which broke the structure, second inducement. Now, when I saw this, I did two mistakes. I would say one mistake which led me to take two losses. Even though it was small losses, there are still losses which makes me take less risks, you know. As I said, it's always better to not start with a loss because you can take not more risk, but you can take your regular risk and add some positions, which we will see later. So now we are in the big daily inverted for value gap. We manipulated New York before 8, another range from low to high. And so my mistake was I didn't want to snipe. I wanted a confirmation. My mind wanted a confirmation. Oh, if I'm wrong, if I'm, you know, but I knew if I traded even from this area, you know, randomly, like put a buy right there and a stop below, this would be enough. You know, the stop is not big from 37 to 33, let's say 4 pips only. And you can be safe in your mind that if the stop is taken, then it invalidates my plan. Then I'm wrong about my plan. But the mind wants to trick you. And so I waited for this kind of shift, okay, or this kind of shift, and I put my stop loss below. I took the trade from this for value gap, okay, boom, stop loss hit. And I believe I tried to trade it from there, stop loss hit, okay? But if I had just put, okay, below this liquidity, of course, my trade, no stop loss would have been taken. And I could have added more trades. Now my live trade is from this first pink line. Okay, this is my entry. So I entered right from there, but with the spread 0.5, it took me there. I will show you. Okay, so now I already took partials. My entry, okay. So you can see I entered from there, spread took me there. No problem. Now, you could have sniped and knowing the intermediate term low was there. It's always easier, but you don't have to snipe. And I always said, if it's the right trade, if it is the right trade, it will give you a clear entry. Clear and clean entry. Okay? And by clean entry, I mean a clean area like this one, displacement fair value gap. Took many weeks, okay? Many order blocks, boom. We come retest at 9, silver bullet, like ICT calls it. And then, of course, it ran above, right into the stop losses, okay? Now it is doing a pullback. I'm not afraid. I already took some partials out, but I'm expecting, of course, more upside. So this was the first entry. This was a risky entry, okay? But this time I put my stop below, not below this one, but below the intermediate term low. I understood my mistakes, that if I'm not putting my stop loss under safe area, it will be taken as liquidity. And I knew since start, before I start analyzing all this, I put intermediate term low. And intermediate term low is a safe place for your stop. This is what it is. It is a safe place for your stop. So second entry, which was more confirmed entry, right there. And third entry, beautiful also, right there. Because you could enter from there, but for me, this is not beautiful. I ignore all this because this is not beautiful. I want something beautiful. And this fair value gap, look how many weeks and highs it took. Look how many. Of course, at least, even if it's not the right trade, you will have a reaction enough to put your trade at break even. So you snipe from there, okay? You wait for reaction, okay? We have a fair value gap. You wait for a kind of intermediate term low. Another fair value gap is formed, boom, break even. Okay, so once this close is done, you are at break even. Now, of course, that we have taken sell side liquidity, buy side liquidity, sorry, it can come back and take all these lows and do like a kind of, intermediate term low, sorry, something like this, and then boom, again. It can do, because the third entry is not the safest one. 47 to 60, it could be enough depending your money management strategy. If you play the risk and rewards style, you wait for free, okay, risk reward free is hit, your day is done, okay. However, if you trade like me, more safer, so with 20 pips being 1%, you have to wait for more. And of course, it's not ideal money management strategy if you are entering late. It's good if you enter early because, of course, you risk much less. So you can take some stop losses. The two stop losses I took only the sum of the two was only minus 0.3%. So not even 0.5%. If I traded with 0.5% per trade, my day would have been done right there with those two stop losses. Minus 1%, I don't trade anymore. That's why I like my money management strategy, but of course, it takes longer to come to the 1% mark. And here it did come to the 1% mark. I took half. And now, because, I was in loss, and so I was expecting more than 1%. And I'm still expecting all these to be taken. Okay. So probably I will take TP before the buy side liquidity, but I'm waiting for more. I'm expecting at least this high. Okay, so that's it for today. It was more educational video about the inverted fair value gap. And you can have many examples on the use of inverted fair value gap. And just watch your chart and now mark up both displacement fair value gap and also inverted fair value gaps. They are equally important. Okay. So I hope you will have a good trading month. There are still 1 month left before Christmas, and I think a lot of people stop trading during Christmas. I do, and I won't do any other videos until then, until next year. So I wish you in advance a Merry Christmas and a Happy New Year. And please don't give up on trading. It can be very hard, can be very frustrating, but you have to believe in yourself much more than anyone, because anyway, no one can believe in you but you. Okay? No matter how much some may believe in you, your trading won't be right until you believe in yourself. If I believed in myself this morning 100%, I wouldn't have taken any losses. I would have taken a full position and my day would have been done here. Okay, with 1%. Now, look the price of non-believing. Now I'm struggling, just for it to go higher, waiting, just to get some close to 1%, because I took a half position from there and I cut half position there. So you understand what I mean. Okay. So take care, trade safe, and see you next year.